Okay, here's a simple candlestick charts, and I'm just showing you exactly what I spoke about in the last video. S&P 500, we have complete pattern symmetry. We lost from 1991, we came crashing down to 1916. We lost about 83 points. I'm sorry, 73 points, 74 points. Large, very fast. Waterfall declines, right? Pull back up a little bit, triple touch, and then we go. Reversal candle right here on the 7th. I'm sorry, what was that day? On the 7th, yeah, on the 7th of August. Since then, same old story. So if anyone tells me, as we keep on hearing in the media, that it's basically a death cross and it's all over and blah blah blah, the fact remains that's all hogwash. This is pattern symmetry in its ultimate form. It is very, very likely, a high probability trade, that we are going to go back, hit 1990 and overshoot. Probably get to 1996, 2000. Please review my other charts and videocasts to validate that point, as I've clearly shown what the top end of the range is. At this point in time, no one has a crystal ball. The markets are, markets are obviously on a technical basis going out there, and it's what I call search and destroy mission for short position, institutional short positions, and that's exactly what they're doing. And the bottom line is that till that is done, the market's not going to correct itself. At this point, we can do a simple. This is a very sharp rising wedge, similar to the drop, which was sharper. And at this point in time, if I do this on the S&P 500, I can see that most probably we can come down, test the 19, very small type of move. We can close this gap here at around 1972. That's that's about 50 points. But it's going to be a very sharp, quick move down, reset the indicators, and it blasts up. We are very oversold. I'll show you in some of the other charts tonight. We're very oversold, and generally from those levels that we see on the McClellan oscillator, as I'm going to show on the NAMO and the NYMO, shown before too, generally we have a pullback. But don't expect any sort of massive crash here. But again, what do I know? If we look at what happened last Friday, we can clearly see that this massive manipulative situation that happened, where they dropped the market 200 points almost, made some money on that move too, as you all know. And then this is the blowback as shorts covered, and then this melt up. So at this point in time, it just seems like it's never going to end. But the point is, it is going to reset itself, and it's going to happen over the next 24 to 48 hours. Could happen as early as tomorrow. Let's take a look at the very powerful index, which is the Nasdaq Composite. Thanks to Apple, thanks to many others, this particular index is basically now literally gone ballistic, straight up. Look at this chart here. We crash and burn, and again, this I'm showing you the very simple kiddie version on the candlesticks, and my more complicated charts are all there for people to study and listen to. So here we are. This is the melt up phase here, thanks to Apple hitting 100 and all kinds of good stuff. And this melt up phase is, there you go. So at this point, in order for it to move higher, it needs to reload. It needs to re-energize. So how does it do that? It comes down here to about 4,500 and then makes its move up. I mean, these are just completely mechanical, machine-driven, technical moves. I've tried to interpret them as clearly as possible. I'm a very keen student of the market. Like to think that I the more I study these things, the more I understand why things do what they do. And you can clearly see here, and I've shown this before, that let me get my drawing tool out. We had a triple bottom, definitive triple bottom. Once they couldn't break that, It was all over. Then we had a consolidation flag where they all screamed and shouted, okay, this is it, it's all going to come down. Nothing. This is a complete pattern symmetry, as you can see. Then we went over this. Guess what? Then they did this pullback. Amazing, huh? They did this pullback, this manipulated pullback that I call it, on Friday, which just simply came back and retested this massive cup breakout, which was right here. See how it all makes sense? They came back and retested this massive cup breakout, and then came this dramatic move. You generally don't see this type of, you do definitely see a lot of dramatics in the market, but this is really one for the storybooks, okay? So you got a cup here. This was a cup 2. Then it created a handle. This was a cup, created a nice handle, took off, came back and tested the cup, and then bang. Right? So, again, we will never know what exactly happens in the world of dark pools and large scale orders, inflows and outflows of global capital. But you know what? We just try to make head or tails out of it. But this is what's going on now. So at this point in time, I do expect a minor reset. But then, what do I know? Mr. Market could basically turn around, and this could just basically rip up and take over 45.37 and just move higher. Apple could go to 105 because they came up with something spectacular over the next 24 hours. All kidding aside, things can happen. Let's take a look at the IWM. Okay, the one that I kept on getting asking. I kept on showing people, and please refer to my older charts, that we're going to close these gaps. That we're going to close this gap, which we did, and that we're going to go ahead. First I said we're going to close this gap, which we did. Okay. This is a more complicated chart. This would be best described in the terms of Fibonacci retracements, which I've shown many, many times. So again, on the Fibonacci retracement side, we are looking at the 50. This is the 50-day moving average right here, and guess what? We are resting at the Fib 50 retracement. On the top end of the move, on a ballistic move, we go to 116.75. I believe what happens is this comes down a little bit. Best case scenario would be that we do this move, where we come down, test this upper gap. Let's say we test this here, and then we move up. Will the market listen to us? I don't know. I don't think so. So at this point in time, I still have some limited shorts in there. I'm going to be very, very quick on these IWM and RUT puts, as you all know. And I'll try to guide people as much as possible. But you have to be very quick on the trigger to take those profits, because once they go ahead and it's going to be quite volatile over the next 24 hours, mind you. Okay, with the Fed FOMC minutes coming out tomorrow at 2 p.m., with Yellen on Thursday and Draghi on Friday, just look for a pocket where we can get out of these puts. So again, best case scenario would be we pull back to about 114.75 around this level, and then we make a move. I still think, which I'd shown from a while ago, that we get towards 116, 117 on the Russell 2000. This is an exact pattern symmetry. Look at that. Now that you draw it, okay, there you go. So I think it gets there. All right. Inverse head and shoulder, showed this so many times, is exactly what happened. And again, if we were completely mechanical and did not have any brains, emotions, and real money at play, then we would basically buy this here, not look at the screen, and just wait for the 50 fib to magically appear, which it 80% of the time does. But these type of zigzags throw us off. I don't completely blame anyone, but you always have some position so that when you arrive at that level at the 50 fib, that you have something in there to say, I did it. Okay, let me move on to the different charts.